Hey, what's up guys? John here. Here's my plan step by step to get rich in 2022. And rich to me is north of $50 million net worth, liquid, having liquidity of north of $50 million. Now, liquidity could be in the form of cash, it could be stocks, it could be a variety of things. 50 million liquid. And here's my goal. It's not going to happen in 2022, but I believe it could happen over the next 3 years, especially with my strategy and what I'm doing. I'm going to kind of lay out how I've come to this conclusion, why I'm going in this direction, kind of stepping away from real estate. I'm no longer investing in real estate right now. I'm pulling back, and I'm going to be investing in real estate probably in about 12 to 24 months when some real opportunities come, in which I think that's probably going to be around the timeline. Maybe sooner, but for right now, I'm focused heavily on credit repair. And interestingly, 6 months ago, a year ago, I had no interest in credit repair, none. It wasn't just anything that I was thinking about at the time. But what's ultimately happened is the world has changed and shifted in such a way to where it makes the most sense for me to dive into this industry. In fact, I leased an office, a block from the ocean in Florida. I hired a team of experts that, essentially I'm the face of the company. I'm driving the traffic, and then they're servicing the clients. And so we're working very, very well together. My goal is to help 1 million people fix their credit, and the net result of that 1 million number would equate to an evaluation of the business far in excess of $50 million. Now, take a look at this, because this pretty much says everything that, at least where I'm coming from, and why I think a lot of business owners and businesses right now should be asking themselves, this big question is, where's the world going? Am I positioned to profit or to lose because of this? For a while, I've spoken a lot about current events and what's happening in the economy here on this channel. I've said, this is the current event, this is what's happening, this is going on. A lot of people say, okay, sure, I agree fully. Well, what can we do about it, John? Well, pay attention to this, because if you don't, it's going to likely cost you either directly or indirectly by not responding and not doing basically what makes the most sense right now. Because it's very clear, it's very obvious what's happening. Take a look at this. So this came out May 12th. What's more expensive is inflation is costing families $341 a month, right? This is May, right? Look at June 10th. Now it's costing $365. So it went from $341 a month costing the family, now to $635 per month costing each family, right? Then you look just 3 months later, went from $635 to $717 a month. Then it went from August to September, right? Literally 1 month. Now they're saying that it's $11,500 per month or per year, right? $958.33 per month is how much inflation is costing the average family. Now, you ask yourself, $950 a month, that's like paying an apartment, or at least it was a few years ago, right? That's how much it's costing the average family when wages are relatively flat. So you have to ask yourself, are you in a business to help people become healthier, happier? Are you in a business to help people make money, to help their relationships, to take care of their fitness? And are you in a situation in which you have pricing power, or are you going to be one of those products or services which people don't need when a recession comes, like we're in right now? But I think a lot of people just don't understand yet how bad this situation is actually going to get. But when it does, you're going to start seeing all these businesses fold because they don't have the authority in a recession. And that's why I chose this credit repair business, is because I think this business is going to have more and more and more authority as the world starts to fall. So when we're looking at this, right, let's just look at cars, for example, because the average car payment in America is $717. At least it was. It might have went up a little bit. Over $700 a month, right? You look at the average credit card debt, look at student loans, look at all of these mortgages, look at all the debts people have. The worse their credit is, the more they default on their bills, which is likely going to happen because there's 20 million American families right now, 20 million American households that are no longer current on their utility bills. So we have this situation where people are going to start defaulting, and they're going to start paying certain things first. They're going to pay for things that they absolutely must have first, and then everything else they're going to default, which is going to impact their credit score. And so when it impacts their credit score, what's going to happen? It's going to get harder for them to get financing. They're going to need to improve their credit score. And so right now, they are saying that an average for bad credit was quite high, sitting at 20.43%, 20% for an auto loan for bad credit, right? Loan sharks charge 15 to 18%, 20%. You look at what that looks like when you're factoring in the average car was $25,000 in February 2022. That means That is $12,382 just in interest on that car on a 60-month loan, right? Then what we look at was credit cards or car payments for new cars with good credit and with older cars, used cars with good credit, 3.51% to 5.38%. The difference, this is $2,371, right? $2,371 is the interest over 60 months, 4.5% interest rate, same car price point, right? So the difference is $10,000 extra, $10,000 in just interest payments due to having bad credit. And what that looks like divided by 60 months, $166 a month, $166 a month. And then you look at the average credit card interest rate, 26.99% is a high interest rate. Credit card interest rates are often based on credit worthiness. If you're paying 26, basically 27%, you should work on improving your credit score for a lower interest rate. Well, of course, because if you have good credit, you can do balance transfers in many cases, where you can transfer debt from one high interest card to a 0% interest introductory card for 6 to 12 months. Put yourself on a high payment schedule to pay off as much or all of that debt during that introductory period. Get yourself out of debt, right? If you look at just a traditional $10,000 balance at 26.99%, it's $8,800, $8,800 in interest alone, just in interest. And that factored out to 63 months, which is how long it would take to actually pay this off. It's costing $141 a month, $141 a month just to the bank, just to interest, right? Just to the lender. And so when you factor both the auto and the credit card, it's over $300 per month in just payments. This is just going to interest, right? So imagine you have all of these households all throughout the country that are defaulting on payments that need to save every single dollar. What are they going to do? They're going to be pushed into higher and higher and higher interest rate situations because they are viewed having low creditworthiness. And so it's going to get harder for people to get ahead. And so you look at just the average housing payment, $428,700. And the average interest rate for a 640 to 659 credit score is 8.25%. So the average $428,000 home price, you're looking at $585,000 directly to interest alone. Now, if you have good credit, 740 above, 7.234%. And so it's $494,000 in interest. The difference is $90,953 in interest alone, just from having a bad credit mortgage to a good credit mortgage, and vice versa, right? So $90,000. It's $3,000 a year, $3,031 a year, and it costs $251 extra per month, just by having bad credit on a home loan. And so when you add everything up, it's $558 per month is the actual cost. If you have an auto loan, the average auto loan, you have a credit card debt of $10,000, and you have a median priced home in America. Now, when you have the average American earning $1,000, this is from the Bureau of Labor and Statistics, $1,037 for full-time workers in quarter one, what this actually looks like is they're earning $4,148 per month, and 13.5% of their gross monthly income goes just to paying for high interest credit card debt, high interest auto loan debt, high interest mortgage debt, right? The difference between good credit and bad credit is costing them about 14% of their income. Like, that's pretty crazy, right? 14% of their income is going towards that. And so when we're looking at what's happening, why I chose credit repair and why I'm doing it the way I'm doing it, for example, I'm doing something different that basically no other credit repair company does, that if we bring someone on board and we're working with them and we get them no results, we'll just give them their money back. So long, there are certain terms and conditions. For example, they can't add new delinquencies or late payments onto the report while we're working on it, because obviously we wouldn't have any control over something that happened after we came on board or after we repaired their credit. If they added like a different late payment or something that was outside of our control, if they canceled right away or something like that, we would need time to work on the report. If they work with us, we will work with them. We are out to get 1 million people into a situation that's going to be much better for them by fixing their credit. That's what we want to do. We want to help 1 million people improve their credit score and to help people get out of debt. So I believe that smart businesses, smart entrepreneurs are looking at situations, looking at the economy differently and saying, you know what, is my service going to be needed? Are we going to actually be able to help people improve their life? Because at the end of the day, that's what people are going to want to do. They're going to need to really start cutting back on expenses and really start cutting back on how they're spending money, and they're going to need access to money. And you can't do any of those things with bad credit. Point blank, you just can't. What I think is going to happen, huge investing opportunities coming. And if you have high interest credit card debt, like for example, that $558 total monthly debt, that's going to impact your debt to income ratio. So if you want to go buy a home, and let's say a second home, or you want to buy something, and they're looking at your debt to income ratio, realizing, okay, well, you're making $4,100 a month and 14% of your income is already going out just to interest, plus the actual debt, plus your living cost, it's going to be much harder to qualify. So these great discount deals, these amazing opportunities could come out, and certain people will say, you know what, I would love to buy it, but I can't get a loan, right? This is what's going to happen. So if you have bad credit, we would absolutely love to help you at CashNow.Video. We want to help 1 million people, 1 million people. And we want to do it by really, really great work, testimonials, and referrals. That's how we want to do it. I feel like that's the best way. We're not going to be paying any corporations advertising budgets or anything like that. We're keeping prices low. A lot of companies charge like all these different fees, and we only have one charge, right? It's only a one price fits all. Even it doesn't matter if you have 10 items on your report or one. It's $119 a month. Does not matter. Even though we're paying for postage, we're paying for the letters, we're paying for the service or the workload, all these other credit card companies or credit repair companies, they offer all these different tiers, all these upsells, and you end up getting hit with all these different. We don't do any of that. It's one price, and if we can't get you results, we'll give you your money back. Like point blank, call us 561-430-5900. And what's even also really cool is that you get a full access to our dashboard. So you'll be able to watch what we're doing, our communication with the credit bureaus 24/7 in real time, even reading the letters. So you'll be able to see everything. But yeah, this is an industry that I think is going to thrive over the next few years, and hopefully we can help 1 million people. As of right now, there's 105 million Americans that have a credit score below 700. I have a feeling that number is probably going to go up to 130 million, 140 million Americans over the next 24 months as people really start to default more and more and more and more. And so it's going to be the real 750, 800 great credit score borrowers that are going to be able to go out there and dominate and buy up all these distressed assets while everyone else is sitting there paying some type of insane auto rate, like 20% or 26% on a credit card, something crazy like that. Like, no one's getting rich paying someone else 20% to borrow money. Point blank, nobody is, right? The rich get rich by lending money out, whether it be through banking institutions. They're lending you money and they're making money off of that money. I mean, that they're investing knowing that you're going to have no other option. And if you look at, for example, the wealthy, they borrow money and they invest that money to make more money. The average everyday American, they borrow money at 10 or 15 or 20% for basic necessities, just to live, right? And then they just stay in this debt cycle, right? That's exactly how they have this whole thing set up. And the next 1 to 3 years, I believe that if you don't get out of the trap that's being set, that it's going to be nearly impossible, nearly impossible. This is the time to really pay attention to every single dollar you're spending. Really ask yourself how you can save more money, how you can build out security and safety for yourself and your family. Because I think things are going to just get crazier and crazier and crazier. I've said this in 2020 or 2021 that 2020 was crazy, but 2021 will likely be much crazier, and 2022 is going to be crazier than 2021. I believe 2023 is going to be way crazier than 2022. 2024 is going to be crazier than 2023. 2025 is going to be crazier than 2024. It's going to get crazier and crazier. So, drop your comments below. Let's have a conversation about this. Hit the like button, subscribe here. Subscribe to my second channel as well. It's an interactive call-in show to podcast. LinkedIn, Twitter, Instagram, and TikTok up in the banner. And I'll catch you guys in the next video.